Management of Equitas Small Finance Bank. Raghavan HKN, President, Inclusive and Outreach Banking, joins in for a deeper understanding of their numbers. Raghavan, it's great to have you on the show. Thanks very much for taking out the time. It's been a stable earnings so far in terms of net interest income. In fact, your provisions have also come down sharply in Q1, leading to stronger profit growth. What have been the key profit drivers for this earnings quarter, which you think are sustainable for the rest of the year?
Yeah, good morning. The advances has grown to 8,926 crores, which is roughly around 27% growth on year. And the robust growths are coming from the tier 2, tier 3 towns, especially the great demand which is coming from this rural segment. And Equitas is well poised to approximate these kind of growth and take advantage, because in the last 5 to 6 years, Equitas has been working strongly to build its strengths to leverage these clients, because 90% of the clients are they are first to move to the bank. They are first time coming to the bank. So hence there's a lot of potential and lot of growth demand, and the ability of Equitas to understand this informal and semi-formal income group of people and their needs is actually driving the growth.
The cost of migrating a microfinance company to a bank, we all know that that came at a cost. Is that transition expenditure, or is that transition pain now behind Equitas?
Yeah, I think a fair bit of transition, I would say, is complete. One, if you look at it, microfinance portfolio now contributes at 27% to the overall advances. And for the first time, the microfinance advances has also grown by 6% sequentially. That means the downward trend of microfinance has now kind of evened out, and it has started growing. And all other products have also started growing and contributing equally. So the migration into new products, more or less, I would say, is complete, and the next key driver would be to grow efficiencies and drive efficiencies. From a banking transition, almost all the branches are pretty active, and there's no more new branches that we are going to put up. And if you look at the total deposits have grown by 1,000 crores over last quarter to 5,700 odd crores, and CASA has grown by 200 crores. So if you look at the deposits are contributing close to 49% of the total borrowing, which I think is an important aspect, because this is going to bring down your cost of funds.
At the operational performance, Mr. Raghavan, while the NI's growth has been very, very steady, I can't say the same about NIMs. They've come down 80 basis points on a sequential basis, and spreads as well have eased. What's leading to the NIM and spread pressure, according to you?
I'd like to put it in two sense. One is that if you look at the spreads from 11.4% has to come to is down at 11.2%. So there's only a 20 bips drop in terms of the spread. So spreads are holding on, and spreads are stable, right? As far as NIM is concerned, in the raising market, we felt that we have to advance our borrowings, and we had a major refinancing from NABARD, and that actually kind of advanced our borrowings. That will also, you see, reflects in our investments, sort of about 800 crores there. So that has temporarily brought down our NIMs, but otherwise the spreads are quite healthy, and that's not cause of a worry.
Stocks here, and you got to mark REITs. It was like a very thanda listing for REITs. Bank of Baroda is still holding on. In last 5-10 minutes, you got Schneider, which has really made a comeback. Big comeback is there, I think, in Schneider. So there are a lot of individual stocks which are picking up now. The breadth of the market seems to be opening up in favor of advances right now. How much of your current book would you say is pure retail and SME? And how much of your existing microfinance customers have translated into a bank customer for you?
I see if you look at the growths that I was talking about, the microfinance book stands at 27%. What has actually improved is the SME. SME book has really grown by almost all 70%. And as I was talking about the tier 2 and tier 3 towns, there is a huge SME demand and there is a lot of credit growth coming in there. And all these people are first time coming on board, and that's actually triggering the kind of growth as far as the SME demand is concerned.
Right. Net interest margins may have come down a bit, and spreads have eased as well at 11.2%. What is leading to the pressure on margins and also on spreads?
Pardon, can you just repeat the question?
Your
It's not
outlook on
audible.
spreads and margins.
Okay, I think I would rather give a thing about in terms of spreads. Spreads are more stable, and the kind of product mix we have already achieved. I think the spreads are going to be normal. Net interest margin, we need to see how in the next couple of quarters it's going to fold, because the advances growth that's going to trigger in the next 2 months should be able to bring up also to an extent of net interest margin.
Advances growth stood at about 27% year on year and 8% quarter on quarter, with the share of MFI, the microfinance business, coming down. What is the outlook ahead on advances growth? Can you sustain the momentum?
I think the one I would like to correct that microfinance advances as a contribution to the overall advances is coming down, or it is stable at 27%. But a standalone microfinance portfolio, if you look at it for the first time, we have grown by 6%. That means over March quarter. So that's actually the kind of also growth. So that might lead to a healthy growth or a normal growth around 25%. And as far as the overall growth is concerned, in terms of advances, all the products put together, we should be looking at 40% growth in terms of advances as we end the year.
Okay, we'll leave it at that, Mr. Raghavan. Thanks so much for taking the time out.